QuickBooks Pro Desktop 2021 Add Subaccounts. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars homepage. We currently have the open windows open. You can open the open windows by going to the view drop down, selecting the open windows list. We're now going to be adding sub-accounts. To do so, let's first take a look at our report and think about what's going to happen when we add those sub-accounts. So we're going to go to the reports drop down, company and financial, and go on down to the balance sheet standard. We'll change the dates up top in the customized reports from 01/01/21 to 12/31/21, January through December 2021, and OK. We're going to be adding sub-accounts down here to our fixed assets, and we'll add sub-accounts down here for our loan payable. As we do so, you can get kind of the concept of the sub-accounts, and then you can apply them to other locations. Many people like to group their expenses with the help and use of the sub-accounts as well. So when we think about the fixed assets, notice we have this kind of issue here where we have the accumulated depreciation and then the account of the account itself, and it's not really in the order we would like it to be. And we have this kind of issue of having two accounts, an account and a contra asset account related to it. So notice there's a couple ways we can think about this. One is we can have the detailed accounts here, and then when we think about reporting them or showing them, we might want to like collapse this. And so we could say, hey, this is the net fixed assets that we can show. However, I'm going to undo this. You might want to have more detail for each subcategory. For example, you might want to have each subcategory showing then the book value or the net value of each category of the fixed assets. And it would be nice to have these lined up, the equipment lined up with the proper accumulated depreciation account, and the furniture and fixture lined up with the proper accumulated depreciation account, and have possibly a subcategory for each. Now note, as you think about these fixed assets, you might want to tie this into what you might be getting from, say, your tax preparer, who might be giving you a schedule that will have a depreciation schedule. That might be something that could help to record the depreciation either on a tax basis, or that you could typically get from tax software book depreciation schedules as well. So that's one way that you could think about how you would make the adjustments to depreciation. And in so doing, you might want to kind of categorize in a similar fashion as would be seen possibly on those depreciation schedules. So that's what we'll think about here. A couple other options you could have with the fixed assets. You could simply have all the accumulated depreciation grouped in one accumulated depreciation account, although you have multiple property, plant, and equipment accounts. But again, if you're tying into another depreciation schedule, you typically want the category and then the accumulated depreciation kind of related to it, linked together. Now, the other way you can kind of order this is with account numbers. So we might talk about account numbers later, but if you don't understand account numbers, then you can kind of mess things up with account numbers. So we won't use account numbers. We're going to go into the subclasses to do that. And then we'll talk about how to do that with the loans down here as well. So let's go into our lists up top, and let's go into our chart of accounts. So within the chart of accounts, here's our fixed assets type of accounts. So we have the equipment, the furniture, those are our two categories. And then we have the contra accounts that are related to them, which is the accumulated depreciation and the equipment account. So what we might want to have is basically a parent account, which would be for equipment, and a parent account for furniture, and possibly make these the sub account. So to do that, what I'm going to do is I'm going to put a parent account, and we can label it a couple different ways. We might just say it's the parent account net, or we can kind of adjust this name a little bit and call the parent account the equipment account. I'm going to say, the parent account is going to be the equipment account net, so that we can basically break in the sub accounts underneath it. So let's see what that would look like. So I'm going to go to the account drop down here. I'm going to say I want to have a new account. It's a rise up. We got a new account, and the new account is going to be once again a fixed asset type of account, which will put it under that fixed asset category. I'm going to say OK, and I'm going to call it equipment, and then I'm going to say net, because this is going to be the parent account. No sub account here. This will be the parent account of the two accounts that I'm going to put underneath it, which is going to be the equipment account and the accumulated depreciation. So I'm going to say save and close. And then I'm going to go into the equipment account here and make it then a sub account of this equipment net account. So to do that, I'm going to go here. You can right click on it and say edit. I'm going to edit that account. And then I would like to make it a sub account of the equipment account. So the equipment net account. So now it should be a sub account of that equipment net. I checked it off and added the equipment net. I'm going to say OK. And now you can see it's categorized underneath there. So it's always going to kind of follow along with that account. Then I'm going to do the same thing for the accumulated depreciation for the equipment. So I'll take this one. I want to put it under the subcategory of the equipment net, right clicking on it, edit the account. And then I'm going to make that a subcategory of the equipment. Once again, the equipment net account. So there we have it. I'm going to say save and close. And so there we have that. Notice it's still kind of out of order. It'd still be nice to have some account numbers so it wouldn't be in alphabetical order in the sub accounts, but they will fall nicely underneath this net account. Let's do the same thing for the furniture. So I have furniture here. I'm going to make a parent account, which will be furniture net. And then I'm going to put this furniture and the accumulated depreciation for the furniture underneath it. So I'm going to say, all right, drop down, rise up, new account. I'm going to make it a fixed asset type of account again. Continue. It's going to be furniture, and then I'm going to say net. And so there we have it, and we'll say save and close. So there we have it. Now I'm going to put the two accounts related to furniture underneath it. So that's going to be the furniture account here. Right click, edit the account. And I'm going to say that this is going to be a sub account of the furniture net account. So sub account there, we'll say save and close. So now we see it falling underneath there. And then we're going to do the same for the accumulated depreciation. So I'm going to right click on it. I'm going to say edit that account, make it a sub account of the furniture net. And there we have that. And then I'm going to say save and close. So there we have these sub accounts set up. Now let's go back to the balance sheet. Let's see what this will look like. Go back to the balance sheet. I'm going to refresh the balance sheet here so it looks good. Now we can collapse it in a couple different ways now, right? Now I can collapse the total fixed assets still, but we can also collapse the subcategories of equipment and the furniture, right? So these are the net amounts, meaning the amount minus the accumulated depreciation, or basically the book value. So if I open up the furniture, then we have the detail within it, the furniture account, and then the accumulated depreciation and kind of a subgrouping within it. So I can show the report possibly by collapsing these two, and then I can show these two categories basically showing the book value of them, and I can break out the detail if I so choose. I have a little bit more control over the ordering of these accounts now, rather than them just being in alphabetical order under the fixed assets, even though I'm not using account numbers. But it's still not perfect, because this accumulated depreciation, you would like it to be underneath the furniture and fixtures. You'd like say furniture and fixture and then the accumulated depreciation. And they can't do that because it's in alphabetical order within that subcategorization. So if you were to say collapse the rows here, notice then you have this condensed basically report, which is going to collapse basically the sub accounts. And that's one way you can show it or demonstrate it. Now let's go down to the liabilities down here. If I go down to the liabilities and I look at our two loan accounts, we have the same thing here. We might say, okay, look, I like having the two loan accounts because I want to break out my accounts separately so that when I apply a payment to a loan, I know which loan to apply it to. So I like that. But when I show this to somebody else, when I present it, I would like it to be grouped into one loan account. So I would like to basically condense these out. Now the loans are a little bit tricky too, because notice this loan is going to be over a year's time period. So it's currently under current liabilities. You may have a long-term liability portion of it as well, because it's going to be something that'll be due past a year. So you're making payments of it in the current time period, and you'll be making payments on it after that time period. So you'll have a current portion and a long-term portion. Now, as you're actually entering payments into the system, it's not nice, it's not good, it's more difficult to have both a short-term and a long-term breakout of a loan that's going to be extending over one 12-month time period. So what you want to do, typically what I would do on that is break out the loan for only periodically as an adjusting entry. In other words, I want one loan in either short-term or long-term. I typically put it into the current loan, into the short-term area, because some software will limit the ability to write a check against a long-term liability, because typically you wouldn't write a check against a long-term liability, right? So that's why I would put it in the short-term here, and then periodically, monthly or yearly, break out the long-term portion so that you can show it in terms of financial reporting, in terms of a long-term and short-term, and then reverse it back out so that you have them in one account for just the normal accounting process, the normal recording of basically the loan payments. So then when they're in here, now I'd like to group these two loans under a subcategory, because I can't, like this subcategory up top, if I collapse it, is all the current liabilities. That's going to collapse basically all the current liabilities here, or other current liabilities, and I have more stuff in there than just the loans. So what I would like to do is, if it was the only loans in there, I could do that, but I want to break out the loans and be able to collapse the loans into basically one account. So what I'm going to do is I'm going to create another account, which will be the parent account, and then I'll make these two basically the sub accounts of it. So to do that, I'm going to go back to my chart of accounts again. We're going to go down to the loans and say, okay, this is a liabilities. I'm looking at these two loans. Now this one's a generic name of loan payable, and it has no account number next to it or anything to differentiate it. I would like to make the parent company named loan payable, and then have the generic accounts below it. This one has a description to tell me what account it is. Oftentimes I'll have like the last 4 digits of the loan number, or if all the loans are from different banks, lenders, you can have the lender name. But oftentimes if you're in a company that has a lot of loans, you might have multiple loans from the same lender, which means you're going to have to break it out by number or something like that, so you make sure you know which loan you're paying. So here, what I'm going to do is I'm going to change this. I'm going to add a number to it, so that I'm imagining it would be like the last 4 digits of the loan number to distinguish it. Then I'll make another account, which is going to be called the generic name of loan payable, the parent account. Then I will make these two the sub accounts of that parent account. So I'm going to say, all right, let's edit this, right click, edit this account. I'm just going to add a loan number. I'm going to imagine that it has the last 4 digits of the loan number to distinguish that account as a separate loan. I'm going to say save and close. Then I'm going to add a parent account, just simply called a generic loan payable. Go into the accounting rise up and go to new, and we're going to say this is just going to be, I'm just going to call it loan and continue, and I'll just call this the generic name of loan payable. There's nothing to indicate that it's a parent. There's only an indication of the subsidiaries and then applying them to the parent. So this is going to be a parent account. I'm not actually going to post anything to it. I'm only going to post things to the subsidiary accounts, which will be housed underneath it. So I'm going to say save and close, and then I'm going to go into these two loan payables and make them sub accounts of the loan payable. So I'm going to right click on this account, edit that account. Let's make it a sub account now of loan payable. Sub account of loan payable, save and close. So there we have it, sub account. Now I'm going to do the same for this one. Right click on that account, edit the account. Then I'm going to make it a sub account of, once again, the loan payable account. So there we have that, and then I'm going to say save and close. So now we have those two as sub accounts. If I go back on over to the balance sheet, then we can see that we have these another kind of categorization. If I break this out with this little triangle, that gives me the detail that I have now, so I can track each individual loan, make sure I make the payment not to some one general loan payable account, but to the actual loan payable that I want to track. And then I can track to see that the outstanding balance still ties out to my amortization table very easily. And then when I want to present this to somebody else, I don't need something that has loan numbers on it, little references for myself. I'm just going to collapse this. We can collapse this item and then present this and say, look, these are my loans. These are all the loans. If you want more detail on them, then I'll get the sub accounts and we'll take a look at each individual loan. So that's a nice way to break that out. Now, a lot of people really like these sub accounts to do things like that. Notice it does add a lot of more detail. So you got to kind of balance how many accounts you want, because I had to add these accounts, which basically I'm not even going to be using they're only parent accounts. I'm not going to post anything to the added loan payable account. I'm only using them to house the other accounts underneath them. So it does add a lot more kind of accounts in your chart of accounts and whatnot, so you don't want to go overboard with it. But on the income statement for the expenses, you might have some grouping like that too. You might want to group some things under the sub accounts. You might have different phone bills or something like that that you would like to group under one sub account of phone bills. Also note that another way that you could categorize is with the classes. So if you're looking at the income statement like expenses and you're thinking about using sub accounts, if you're thinking about using sub accounts for different regions, like you have different areas, or if you have different kind of categorizations, one way that you might want to think about doing that is using classes. So consider the use of classes. So if you're talking about the phone for this office versus another office, and you have other expenses that line up between this office and another office or something like that, then you could use sub accounts, but you can also might want to use classes. And that's another kind of topic we might talk about at a future point or after this practice problem that you can consider to breaking out something like that. Okay, so here's where we stand now. Here's the balance sheet at this point. Nothing else has really changed. We just changed the grouping to the balance sheet. So if you want to check your numbers, this is where we stand at this time.